The new trading week began with the worries about a possible deterioration of the epidemiological situation globally. As a result, the US stock market is reviving, while safe haven assets are losing luster with investors. This is quite bullish for commodities and riskier assets as well as for countries exporting raw materials. How may this situation affect financial markets and major currencies? Let's discuss it. The US dollar index fell by 0.5% from its annual highs on Friday evening. Today, it continued to extend losses. The spike in the quote above the level of 93.50 came after the Fed's minutes pointing at the earlier tapering of the asset purchases. However, almost immediately after a sharp rise, the greenback slid into correction. Now the correction seems to have slowed down. So, the US dollar is trading at 93.40. The retracement of the US dollar index was caused by the worsening epidemiological situation. If there are no improvements, the regular is highly unlikely to reduce its quantitative easing program in the near future. At the same time, experts are confident that the drop in the US dollar is a temporary factor, even though it has led to a small pullback. The US dollar is expected to trade in the range of 93.10 and 93.50. The yen is currently unable to add gains due to the new restriction measures imposed in the country, so it has been losing ground against the US currency for about a week. Now the dollar-yen pair is located at 110. According to technical indicators, the pair is moving to its previous target level of 110.15. That may be broken in tomorrow's Asian session. If so, it may well hit the 110.60 level. There are some doubts about the second target level, as much will depend on US economic reports which are due this week. As for the first one, the pair is highly likely to get there. Meanwhile, the Australian dollar continues to correct upwardly from the target level of 0.7124 reached on Friday. One of the key indicators signals an upward movement. So, it means that the correction may last for more than a week until the indicator level around 0.7323 is broken. So far, this is the main target level. Let's sum up what we've got. This week, the US dollar as a safe haven asset may rise higher. However, it needs to break out of the correction stage, which is already seen on the chart. The further scenario will depend on the important market events that are on tap during this week. In particular, investors are waiting for the speech of the Fed Chairman Jerome Powell, hoping to get some hints about the timing of bond buying program tapering. On Thursday, traders are going to assess the second estimate of the US second quarter GDP. And that's all for now. We wish you profitable deals and see you on our channel with a new video in a couple of hours.